Wow, what an earnings call once again for Tesla, and the stock is off and running today at the time of filming this like it's 2020 all over. I mean, seriously, if you look into the numbers and not just the highlights, there are some amazing things going on underneath the surface that we will discuss today. And you guys know I'm not a pumper, so you know I'm not blowing smoke up your rear. But of course, right after the earnings call, the stock dropped immediately after all those incredible things were announced. But then it was up again big time this morning, but something just kind of smells funny, and I personally don't trust Wall Street to not have something up their sleeve. Is that because Wall Street is setting up to screw Tesla? Well, I'll give you the reasons why Wall Street is treating Tesla the way it is, and why I may actually love what they may try to do to Tesla. And I have a special guest lined up to discuss this as well that will either be a special treat or the worst thing ever. So make sure you like and subscribe to this channel if you like the truth without the hype. And don't forget to get your completely free download My Stock Investing Checklist to help you out, and check out the Market Insiders private group while you are there, where I have posted 70 buys now over 19 stocks, and that included our last Tesla buy in the low 600s and 2 swing trades that netted a 2x and 3x. So if you want those alerts, plus 4 free courses, live weekly Q&As, exclusive videos, and a ton more, check out the pinned comment. And before blasting me for promoting it, I have no ads, no sponsors. This is what YouTube pays me in a month, and I give half of that and half the group's proceeds to charity. So Tesla blew away almost all expectations, beating both on the top and the bottom lines. But that to me wasn't even the best part. They also had 29% margins without EV credits, which is better than the 25% margins they posted the prior quarter, all while not really selling any of the high margin cars like the Model X and the Model S. Imagine what that number would have been if they had sold a normal amount of X and S's that have a higher margin. And remember, those margins are without the regulatory credits, so bringing those up is just a waste of time at this stage. It didn't matter. Except to Gordon, who says that they have a margin problem. I don't know. I don't think people really understand how amazing this margin growth is. They are getting tech-like margins and a factory-driven business. It doesn't matter if other automakers actually compete. This is a margin that none of them can touch. And for some perspective here, those margins are 3 times better than GM and 6 times better than Ford. I mean, seriously, think about that for just a second. And somehow Gordon Johnson thinks they have a margin problem. And keep in mind, this was all done while building 2 factories, meaning huge amounts of capital going out and no money coming in from those projects. And if you really dove the numbers, they retired a lot of long-term debt and did some balance sheet cleanup, which makes the numbers lower for now, but sets them up to look really, really pretty later on. Essentially, if they wanted to, the numbers could have looked a lot better, if you can believe that. Just think about how juicy this balance sheet will look when the new factories are bringing in the money instead of costing money, and other balance sheet drags are no longer there to drag the balance sheet down. It's just crazy to think about. Now, there's a lot of other great videos out there that discuss the increasing demand, or that Tesla is trying to grow 50% every year for like forever or whatever, so I'm not going to rehash all that here. But the bottom line is, everything is lining up perfectly, but we still need to be patient because the full ramp up of the new factories won't happen until most likely 2023. But despite all that great news, I still think Wall Street is going to take a dump on Tesla over the next few months, so let's run through those reasons right here. And the first reason is that Wall Street is still not sold on Tesla itself. Like it or not everyone is sold on where Tesla is going, what they are trying to accomplish, and what it will do for the share price ultimately. You also still have many large investors that just don't like Elon and his antics and would prefer a more buttoned up approach to running a company. Now, we all know that's not happening, and Tesla would not be where it is today if it was not like Elon was being Elon. You know, if he wasn't him, they wouldn't be where they are. But I will say, not having Elon on the earnings call was a great call, and it was a much smoother, more focused call, which is what big money likes. So although it was boring, it is moving in the right direction, but there's still a long way to go to change all their minds. And the second reason Tesla may turn down again when the euphoria wears off is the big run up ahead of the earnings in the first place. Look, the reality is Tesla ran up over 30% ahead of the earnings call and really picked up steam after the delivery numbers were released. Nothing short of a complete blowout earnings that even surprised the Tesla bulls out there was going to send this stock to the moon long term. Now, the earnings were great, don't get me wrong, I'm not being a bear or anything else, but they were far from blowout given the run ahead of time, so some downward or some flat trading over the next few months should be expected. And this should excite you if you're a long-term investor, and this is exactly why I'm excited. We have had 6 or 7 months now to add Tesla at a price you thought it would never reach again way back in February. Tesla is executing incredibly, and you can still buy shares at these prices. Except when you look at it from a valuation standpoint, these prices are actually cheaper at the higher price than they were back in March at the lower price. This is the exact scenario every long-term investor wants with every stock they want to own long-term. And that would essentially be an extended time of incredible performance by the company, but the stock price kind of stays flat or kind of goes down or just kind of bounces within a range. It happens all the time, and the longer it goes, the bigger the slingshot is when it finally runs. And it will eventually run, guys, don't worry about it. Then people will FOMO into the stock because it came out of nowhere, just like Tesla did in 2019 and 2020. But the reality is Tesla didn't come out of nowhere, and those that bought in 2017 and 2018 or even earlier saw signs all over the place that this was going to be a beast at some point. Alright, so now for a special treat, or the worst thing you have ever seen depending upon your perspective. We are going to play you the message recorded earlier today by the Tesla bull, because for my own safety, I just could not be there for it. So here you go.
Tesla is so disrespected. I hate Wall Street, and Luke, you're part of the problem too, because you're a freaking idiot. You caused Tesla to fall afterwards because you're a bear and you don't drink Elon sweat every day like I do all day long every day. And then you have short sellers like Warren with his wimpy $20,000 price targets and those hyper-changed bears who wear hyper diapers because they sold Tesla shares to buy a Tesla, which is a short seller move if I've ever seen one. If you're a Tesla bull like me, then you have women lined up for days because women prefer bulls, not shorts. So they happily bought me 28 Tesla cars and will buy me more Tesla cars in the future. Because I'm the Tesla ball. I'm the Tesla ball. I'm the Tesla ball.